All right, I need everybody to go on Rumble right now and follow my page so you don't miss out on any videos or live streams. Anytime I share the links on X, they get hidden due to the fact that we are no longer allowed to post external links on X that get broadcasted out to everybody. So even if you have your notifications on X, you might not get it. So follow, turn the notifications on. That way you don't miss any of the free content I'm putting out here in the future. All right, what's going on, everybody? I know I am competing with the NFL, and you heathens are obsessed with that garbage. So I'll keep it short and sweet. We'll run through. I got a bunch of stuff that I want to get into. So that'll be good. Not a weekly prep, obviously. As it's Thursday, but we'll talk about non-farm payroll, what we got tomorrow morning, and then just kind of how we can anticipate what the likelihood of the next move following that initial whatever it might be tomorrow. So with that being said, if you haven't already, feel free to like this stream, whether you're on X, Rumble, YouTube. Would appreciate it. And here, I'm gonna get going here now in a second. Let me just get the screen share going. I got a bunch of requests for things to talk about, so we'll ride it out. Where are we? Here we go. Good. All right, let's do it. So we'll go over here. Let's go to the weekly time frame, actually. Okay, so everybody at this point should be able to see here. Beautiful. All right, so first things first. Obviously today was the day prior to non-farm payroll. Now, if you were watching price action today, was I kidding you when I told you that the day before non-farm payroll is usually pretty? No. For whatever reason it is, I wish I knew the reason. I don't. It's just how it is. Typically the Thursday before the non-farm payroll Friday, it stinks. It's just a very up and down wicked in both directions. And, ultimately it's much more difficult to take trades knowing that it's going to be that type of day, right? It seems as if things slow down for an hour, hour and a half, and then you get a one quick 5-minute jolt and immediately back to where it was. So, if, for me personally, it's just a day where I really don't even look towards indices whatsoever. And I tend to look at individual names. And if individual names aren't doing much of anything, then I pack it in for the day. Tesla was nice today. I'm so annoyed, but I did sell my longs yesterday. I have shares in it, so I got some of it, but I had 215 strikes for next week. Those would have been really awesome, but it's all right. The move, what was it on? Wednesday was good enough for me. So, but anyways, here's your weekly on NASDAQ. Inside that weekly bullish imbalance, in addition to a weekly inversion bearish, now looking to get movement off of that level going into tomorrow. Now, I think at this here, whether it happens overnight or it's the first move that occurs tomorrow morning with that non-farm payroll drop at 8:30, I'm thinking that these seem inevitable, these relative equal lows. Okay. And following that, realistically, bulls will see a strong reaction off of that. Okay. We talked about it this morning, how we could see price getting into this bearish imbalance and then ultimately going to get those equal lows, or was it the equal lows first? That was really the one question that we had. And prior, really, as market opened, when we got up into this imbalance, that kind of set the tone for the day, right? And that's the one thing that I want to reiterate a little bit here is that even though that I was able to kind of dictate what was going to play out on an overarching picture today before the market opened, and if you want to check me on that, just listen to this morning's call. That's why I do it before it, so no say, oh, you're hindsighting it, right? Nope, it was said before. But even when you crunch that down onto smaller time frames, just because you have that big picture, all good, all great, when you zone in on those smaller time frames, some days they're just not, it's just not it. it's not giving you that opportunity to really strike on it. And if it is, it's really tight in terms of what your potential risk is going to be, how you're going to use that trade actively. So I'm a big advocate for the idea that half the battle in short term trading really to me is uh, knowing when and when not to push buttons. And that's why I use historical data to help me out in those cases so that I don't get caught in those situations where, I'm kind of stuck in a sense, but um, but that is just the overall idea. So, ideally, this is me. This doesn't mean that it's necessarily going to happen, and I'm not going to jump in front of a moving train like this. But prior to that data, I would really like to see a sweep of these relative equal lows, and from there, I really do actually want to see us start moving higher again. We didn't get down to this 50% just yet. Maybe a low wick to get us down into that discount area of this daily range. The possibility too. And like I mentioned earlier today, this bullet breaker here, while not in discount, if we are going to leave that breaker, I really don't want to close below it. I would rather it just be a wick and uh, right back into that breaker, this black box right here. I know it's getting a little jumbled, but that to me would be pretty ideal for bulls in this situation. So that's kind of what I'm going into, or the mindset that I'm going into today, tomorrow with. Prior to the data, I don't obviously do much of anything, but after the data, it seems to be a pretty smooth day historically. So I don't really have all that much. It's not like I'm against reading the non-farm payroll Friday. It's just really the day before is when I just cannot um, do much of anything. So. Um, I'm sorry if you guys can hear this Discord blooping in the background. I'm sure everybody's talking about football instead of getting better. So, um, all right, let's get into some of these questions or comments and such. So, let's see. Okay, so wondering for non-farm payroll tomorrow, should we see higher or lower than projection to pump this market? So as you all know, I guess the person who asked this doesn't really follow what I talk about much, but I really don't know what the print is. Don't even know what the expectations are. It really doesn't matter to me whatsoever. Whatever's on this chart is how I'm going to be dictating the moves that I make. To me, all of that is just noise. I just actually dropped a tweet a little while ago about the people who talk about good news being bad news or bad news being good news and vice versa, right? It's like, how is that helpful in any way, shape, or form? There's literally zero insight to that, right? Because how many times have you seen the initial reaction to, I don't know, let's say bad news be bad, and then by the end of the day, you're well green, right? It's not to me, it's just not helpful at all. So if it's not helpful, well, why am I even gonna waste my time trying to, outsmart a computer algorithm that's delivering price? It just doesn't make any sense for me to do that. But if I can have a game plan set prior to that, then I can actually operate off of that versus me saying, "Oh, okay, bad news means bad, means it's going down, or bad news means good, it's going up." At that point, you just flip a coin. That's your best bet because at that point, it doesn't even um, I just don't understand why that would be like a viable idea or strategy. It just doesn't really make much of any sense to me to you know, try and forecast that, right? If it's not a perfect correlation every single time, then how is that useful? That's my take. But um, it wasn't until Mando that I realized why the market would go up on bad news. Yeah, because to me, it just doesn't matter. All that news is, and the only reason why I even really bring it up is just due to the fact that at those times when that news drops, you get that volatility that comes as a result. Okay, and that's really the focal point there. So that's all I really have to say about like what the exact print is. In regards to tomorrow. Oh, whoops! I did not mean to do that. Whoops, sorry. I just unshared for a sec. I'm pulling it back up. Um, okay, PA from today. Sure. I mean, we can look through it. Let's shoot. We ain't up at 21,000. Here we are. Let me zoom in. Um, we can go through a little bit of today's PA. We could break this down. I mean, we really realistically could go candle for candle, but let's do it. Okay. So entering, okay, pre-data lows, sure, which we have yet to sweep yet. So these are the data lows. Okay. Whoops. Okay. And what was our draw on liquidity following that move pre-market? Not only was it buy side liquidity here on your 5-minute time frame, and this dates back to Wednesday, 11 a.m., but also you'll notice that what else did we get into as a result of this? And this is where it kind of comes into play, the importance of being able to go through multiple different time frames as a way to um, uh, I guess, create probabilities in a sense, right? And what do I mean by that is, let's come back over here to the daily time frame, and you're going to notice that what was the high of today? It was inside daily bearish imbalance. So that really told you all you needed to kind of see, right? That imbalance on the daily time frame was a liquidity sweep on a 5-minute time frame. Look how perfect that lines up, right? And from that point, really, did it give me any opportunity? And this is also where it circles back to the idea that is it really all that viable to trade the non-farm payroll the day before non-farm payroll? To me, it's just not, right? So if you were to look at this and you see, obviously we got our run up, we swept liquidity, got into that daily, bearish imbalance right here with this high that we made today. We come back over here. And from that point, there really was not much of an opportunity anywhere to take part in this short unless you try to jump it, right? And which is fine. I mean, some people perform well by doing that, right? And if you were to take that initial sweep, that first time you're getting stopped, okay, right? You're shorting this, right? If we swept that was our first tap. You short it, ultimately you're stopped. Then on your next opportunity, if you were to do the same, if you gave yourself a little bit of wiggle room, you would have been okay. But even if you shorted this next candle here, how big is your stop loss in that situation, right? So for me, while, like I said, there are people who have success doing this, I just don't really look to do it. And the reason I don't is just due to the fact that there's really no structure for me behind that idea. Like realistically, if I'm playing that sweep and that daily into that daily fair value gap, like my stop loss would be like almost 1,000 points higher, 900 points higher. Like to me, you know, because where does the trade idea go bad from this point? And it's really here, right? The high of the candle that created the imbalance. That just doesn't really add up to me, right? And maybe if I were to look back and go really, really far back and see that there was some sort of 5-minute imbalance there, I could have used that as my structural guide. But in the situation we had today, there really wasn't much of anything for me, right? So even when we ultimately dropped following, you'll notice that we actually didn't sweep the data low either. But from this point, by taking out this low right here, you do shift structure on a smaller time frame. So you have your high down to your low, right? And here's the low that I'm referring to right there. Okay, by taking out that low, you shift structure on a 5-minute time frame. Price ultimately runs up into discount, as it typically does. Runs up into a bearish imbalance in discount of the bearish price run. And from that point, where would my target be? Low, right? Would this be a viable idea? I mean, sure. If you're going to be trading it at 8:51 Eastern here, but price action, it's all the same. There's your discount retracement, bearish imbalance. There's your run down through lows, and that is the completion of a bearish Mando model right there. Okay, so the only difference here is that there was really no immediate opportunity, right? If you were looking for this retracement, you were waiting until about, what is this, 250. And from that point, you got an initial nice move. But if you weren't quick with your profits, you ultimately would have likely gotten stopped out again. So that's just the non-farm payroll type of days, right? These are days where you can really note this price action, right? And if you are one to journal, which I think can be really beneficial for a lot of people, I know sometimes people get busy and they're not able to keep up on it. And if that's the case, it is what it is. But I think it's at least worth a try or at least drill it into your head that there are just certain days and times that price just really doesn't deliver all that well. And this would just be another great example of it, right? Now, one thing that I wanted to also go over based on today's price action would be if we were to look and just label our London highs and lows. So our 1 a.m. session here, let me drop a a vertical line here. From 1 to 5, we're going to identify the highs and lows and just see how price reacts and see if we got our kill zone today. So here is your high of that session, London kill zone. Here is the low of the London kill zone session. So we took out kill zone low right into data. Okay, your first imbalance forms. That's your entry. Price gets into that bullish imbalance, and there she goes up to London high and beyond, right? But London high, that's like a low hanging fruit objective there. And realistically, I mean, that in itself, that's over 100 points right there on the London kill zone. So, just another tool to throw in your back pocket. I do have a video on that, but that one is just that one's just easy. Yeah, I did call you guys out on the stream. But anyways, that's just for today's price action. I hope you picked up on something new there, or it was helpful in some way, shape, or yeah, exactly. Seek and destroy. Yep. So Occasion brought up seek and destroy. That's also an ICT concept where essentially it is just a vicious grab for liquidity in both directions, both buy side liquidity, which would be your highs, and sell side liquidity, which would be your lows, right? So now if we were to just kind of pivot off of this and just take what we have right now, and like I said, we didn't quite take out that daily low just yet, which I think is fair. Look how clean these hourly equal lows are. And what do I mean by clean? Look at that. That's liquidity here. Liquidity, 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 right? You see how many of these equal lows that are just present here. That's a lot of money that can get triggered on a run on stops down to 825, right? So really, I do expect that to happen. And I think, if this were to happen prior to market open, I think that it can kind of like resolve the or kind of tell the story for you prior to market even opening, right? If you were to form some sort of imbalance down through sell side liquidity, then my expectation would be a continuation lower. But if we were to sweep, meaning we would dunk that low and immediately close back up above that area of liquidity, I would deem that a protected low, and I would be looking for higher prices as a result of that. So that's just another little strategy I guess you can add into the toolbox. But like I said, there's so many different ways to go about this that it's really not one size fits all. But to echo what we're seeing, if we were to go back and look just through these little fluctuations in price, they're just much more clean than what we saw over here for today, right? And that just goes back to me personally thinking that half the battle really is like, are you going to trade when it's historically been a pretty bad day to trade, or are you going to just sit it out, save your money, save your headache, and keep your mental in check as a result of that? And just for reference, okay, let's just go to here. The writing was really on the wall almost immediately. Okay, mitigated bullish imbalance here. Okay, and we ultimately form a bearish imbalance through that. Okay, and I'll zoom in here so you guys can see a little better. See that? That's a bullish level. Now, okay, we call that a balanced price range, an imbalance through a previous imbalance. Okay, yes, you did get immediate response from that where you rebalanced and rejected lower. So that could have been a decent idea. That's again leading into that 8 o'clock hour. And then guess what happens immediately after? Another balanced price range, bullish imbalance through that bearish level. And this is kind of a staple for seek and destroy. Now, immediately following that, what happens next? Another balanced price range. Okay, now this is a bearish imbalance. So do you see now, do you really want to be a part of something like this? Like, is that really tradable? Look, and then following another bullish imbalance through a bearish imbalance. Is this really something that you want to be a part of? I 100% do not. So, obviously with hindsight, it's easy, but that's why, I think it's important to at least note that these situations do arise where there are certain times where you're better off just sitting it out. The price action, the writing is on the wall. And it really was on the wall since overnight, 2 o'clock in the morning, right? Were there scalp opportunities? Sure. I just showed you guys the London kill zone. That was a killer. That's over 100 points. You could have nailed that and you could have said, oh, non-farm payroll the day before. It's a great day. But if you got caught in anything else throughout the rest of the day, you were fighting the overall direction. You're in some trouble. So that is just my take on today's price action, how I guess I would dissect it. But again, it just doesn't make any there was no real enticing factor throughout all day today that made me want to push buttons on NASDAQ futures in general. So anyways, called it at 6 a.m. Oh yeah. Yep. No, I try and say it every time before the non-farm payroll. Again, I wish I could give you a real reason as to why that's the case, but it is what it is. It's a rough day. Okay. So let's see. Let's see if there are any more overarching questions, and then there's just a few individual names that we'll scan through real quick. Okay. Yeah, all right. That's good with the overarching stuff. So, Chiefs or Ravens? Don't care. I don't know. I really don't know anything. All right. Let's go CLF for SNAS. If you haven't already, please like the stream. Like I said, we'll be a little quicker tonight just based on the externals here. But here it is, CLF. Low to your high, you got your discount retracement. Nice. Good eye there, SNAS. Pretty good. Yeah, so I'm thinking maybe this imbalance right here. A new monthly candle as well, but I think that monthly imbalance right down here is pretty good. Let's just see. There's a breaker down here also. Low, high, lower low, break up and through. Bullish breaker. That's a beauty. Okay. That's actually lower than that current imbalance. So kind of looks like a little bit lower. Let's just keep this moving here. It does seem like a little bit lower is a likely draw. That's the imbalance that I'm really anticipating. This one doesn't look like much of anything, and so far we're creating a weekly imbalance through previous sell side. So I think this can head just a little bit more south. And then ultimately that bullish imbalance coinciding with that breaker right here is really pretty juicy there. But that's CLF. Let's look at DG, Dollar General. Okay, DG. Okay, I think one of these two was the company that basically came out and said that we're in a recession, right? And yeah, what a fall from grace here. Sheesh. Okay, so your low to your high. We'll go back all the way and just do Dollar General Mano models. I just want to be precise. Okay, here it is. Discount retracement, bullish imbalance, run for highs. Mano models complete there. That's back in 2010. Okay, low to your high, discount retracement. Inside your bullish imbalance, there's your run for highs. Mano models complete. From your low to your high, discount retracement, bullish imbalance, run for highs. Mano model complete. From your low to your high, no discount just yet. All that tells you is the range is not quite set, which is fine. Now it is. Low to your high. Here's your discount retracement. Here's your bullish imbalance. There's your run for highs. Here's your low to your high. Discount retracement, bullish order block. Not really ideal for me, but plays nonetheless. Run for highs. Mano model has been completed. Are you guys starting to see this now? Low to your high. Discount retracement, bullish imbalance, run for highs. We actually shifted bearish. Whoa. Okay, so Dollar General actually, believe it or not, had a bearish market structure shift here. There's been a couple more Mando models in the mix. Low to your high, discount retracement, run for highs, complete. Low to your high, discount retracement, run for highs. Here we'll go again. Low to your high, discount retracement, bullish imbalance right here. Run for highs, and so on until you do eventually get a failure. Coming up here, low to your high, discount retracement, bingo, run for highs. Low, whoops, to your high, discount retracement, run for highs. Okay, and then like I said before, you ultimately, by taking out these lows here, you do shift market structure bearish. Okay, so that's what we're currently working with right now, and it really looks something like this. From your, where is it, whoops, high of the price run down to your low, we did not quite get to 50% just yet, and we have not shown any urgency at this point to put our foot in the ground anytime soon. Okay, you got some more relative equal lows down here. This is a pretty ugly chart. Let's come on over here. Oof, yikes. Yeah, Dollar General really doesn't look good. Okay, you have a bullish imbalance here that we just got into, maybe a short-term bump, but those relative equal lows down here are pretty sketch. Yeah, this is not really a good look for Dollar General. Wow. Let's see if Dollar Tree is any different. Did we sweep this low yet? No, we didn't. Okay, so relative equal lows begging to get swept at that point. Let's just see. I'm just looking at this most immediate run. Yeah, Dollar Tree looks like it's in much better shape. Hold on, let's just confirm that. Yeah. Here it is. Boom. Discount retracement. Bullish imbalance. Run for highs. Mando model complete. Oh boy. This is in bad shape too. Yikes. There's your low to your high. Whoops. Discount retracement. Bullish imbalance. Run for highs. Okay. You have your bearish shift. You have a failure, right? Low to your high. Got into your discount imbalance. Not quite. And dumper. Okay. So this is also a bearish structure setting up, especially with that low being left behind. The 60s holler in there. Yikes. Yeah, these two names not looking too good. Ultimately a sweep of that low right here. Could you get an immediate response off of that? I would expect that, but yeah, that one does not look good either. Let's look at Rivian for Cajun. I think right off the bat, I think this is a good look. I remember it being a pretty decent setup, and now you're starting to see these other EVs starting to move too. So far, so good. So immediate price run from low to your high. You got your discount retracement. There is a bullish imbalance there. If I recall correctly, we had no. Yeah, so we did not take out last month's low. We don't necessarily have to, but I think that would have been preferable. Let me go to a smaller time frame and see. Okay. All right. From your, okay, why do I have my range set from there? Well, low to your high, you got your discount retracement. There's your run for highs. That would be the completion of the Mando model. Okay, so far not too bad. Tomorrow will be telling, but yeah, I still think I would prefer it to sweep that low. I have the alert already set, but I think that's where I want it. We rejected the bearish imbalance formed a couple weeks back last week, and so far this week as well. We're leaving behind these equal lows now, so I think I want to see that get swept at 1272, and then ultimately from that point, my expectation would be about 1840. So that is Rivian. So yeah. All right. So that's Rivian. That's definitely my plan at least. All right, ZS for Frank. Okay. Yeah, I'm not loving this. 3 sets of relative equal lows now. Dangerous. Okay, let's see. Yeah, this is a little dangerous. Okay, so you have your shift in structure here. Okay. We are discounted. Your discount imbalance isn't for quite some time, 128. And what coincides with that is your monthly breaker right there. Low, high, lower low, break up and through, tracement back down into your breaker. You'd anticipate it to get in and get out. So not quite yet there for me on ZS. A silver lining here at the very least would be that rejection right there. It's pretty encouraging. Now we're filled, right? So if we were to go down and get this, we have no imbalances overhead other than this one bearish volume imbalance. So that's pretty good. Okay, DraftKings. We talked about DraftKings a little bit this morning, but so far so good. Got into a bullish imbalance here on the monthly time frame. I think a lot of people just start looking at this because it's like NFL and all of that, but as you know, this is a pretty nice setup. As we said this morning before the 4% move, price got into a bullish imbalance here on the weekly time frame. So far so good. Really, this is the level to beat. I think if you take out buy side here at 36.63, your next stop is the relative equal highs here at 37.78. So yeah, DraftKings actually looks pretty good right now. So here's kind of what it's cooking with on the weekly time frame here. I'm not so sure we got into discount just yet, but let's see. No, I don't think so. I don't think so. Ah, we did. Look at that. Yeah, this could be a beauty. This could be a beauty. Filled imbalance here, filled imbalance here. They're all filled up. DraftKings actually a pretty good look right now. So Enrich, nice eye. Nike, sure. Let's look at Nike. Okay. Okay, so we swept liquidity here. This is last month. Nice. Got a nice little run higher. Currently dealing with the midpoint of this bearish imbalance and also this mitigation block right here. Okay. Similar to a breaker, but just not quite that higher high, right? But running into that right now. Let's see what we got here on the weekly. Yeah, it's a pretty clean rejection thus far. This is the imbalance I want to see hold up. It's got about 6 points in range, but this is really no man's land for me. We have a bearish imbalance with a bullish imbalance inside it. Kind of no man's land here. Here's just another example of relative equal lows and price wanted to go back down and get them low. Second low, not lower than the first. Those are relative equal. Magnet. Okay. So yeah, Nike, I'm really indifferent right now. This is, could I justify a move higher? For sure. But not quite yet. At the very least, 78 is discount of this range, but still not really that great of a setup. So one thing that you could take away here is like the difference that you see between DraftKings and Nike. The DraftKings chart giving a much more clear and concise idea versus what you have on Nike, where I can basically give you a pretty good argument on either side of this. And if I were to do that, then how is that helpful? So I try to avoid those as a result of that, but I got a couple more. Before we do that, let's talk about the Rumble store here. Rumble's exclusive apparel has finally arrived. They are now offering 20% off all purchases in the Rumble store with the discount code DROP20. If you want to support the brand that is fighting for free speech and fighting for our First Amendment, this is the best way to do it. They have tees, sweaters, hats, plus much more. Go to rumble.store and make sure to enter DROP20 as the promo code to get 20% off your entire order. That is rumble.store. Okay. So yeah, I mean, honestly, I'm shocked that we actually have as many people as we do in here. At what point is a breaker invalidated? Good job. Yeah. If you take out a low or a high, let's say the low of a bullish breaker or a high, it's not so much the wick because the wicks are going to give you a heart attack, but the bodies are really telling you the story that or what's happening in that situation, right? Oftentimes, when you see those low wicks down through, it's going to rebalance one of the imbalances that are lower than it. And from that point, you look for that reaction, and typically it'll yank price back into the imbalance, right? So, one thing that I'm looking at, and this is very similar actually to, it's not really on the breaker topic, but it's kind of similar to what I would be looking at in terms of is a breaker valid or not, right? So let's just look at this right now, and realistically this is what I would personally want. And by the way, we took out those equal lows there. So now the next order of business, do we create the imbalance lower or do we snap below and kind of consolidate still? That could be a sign for bullishness into tomorrow. Now, if you see that snap down here, tab discount, I would want a very immediate move back to close back inside this imbalance. I wouldn't want to close below it. And to me, if the idea is really based around this imbalance, right? Yes, 50% is ideal, right? You want to get down into discount. But if the idea is to use this imbalance as the structure for my idea or my trade, if that gets balanced, and at what point does that really get balanced? If price moves below the low of that candle, right? This imbalance is useless. And if that's the case, and that's what I'm trading off of, there's no reason for me to be associated with that idea anymore, right? Um, so that's the idea where we would look for that wick and then ultimately for this hourly or this daily to close back inside this imbalance. That would be extremely encouraging for bulls, right? But that's the same idea with the breaker. Let's just play pretend this is a breaker. If price were to reach down to get 50%, I would still want it to close inside that breaker. A close below it, and I'm not really all that thrilled by it, if that makes sense. All right. I think that might be. Oh no, we got a few more here. Sorry. Okay. Upstart, sure. Let's look at Upstart. So obviously, still a great setup here. Rocky start to the month, no problem. It prevents a monthly imbalance from forming with a move down to 33.03, and honestly, that doesn't seem all that crazy, due to the fact that our most recent price run. Apologies for a lot of these levels. I don't tend to chart them every single minute, but it's pretty interesting spot for a rejection, guys. What do you think? So this is exactly what I'm talking about, just the flip side of it. This would be a bearish example, right? Yes, we've reached above this bearish imbalance, but the closure is what's important. These bodies of these candles are what's telling you the story, not the wicks. The wicks are going to just give you a heart attack and drive you crazy, right? They're not telling you anything, but ultimately that's a pretty perfect rejection right there. Now, with that being said, we said that number was 33 something on Upstart, right? At this point, getting us down into discount of that range would prevent that monthly from forming, and that's kind of what I'm anticipating. Now, at this point, I really would like to see that breaker, low, high, lower low, break up and through, retracement back down into the breaker and get up and go. So I think there's a couple dollars left to the downside there on Upstart, and then following that, I'll be happily bullish again. Yeah, Penn's another one. Penn looks pretty good too. Yeah, that lines up really well with the DraftKings setup, if I'm not mistaken. Here's Penn. Okay. This one actually kind of reminds me of Upstart because down here in this area, it's so far off its highs. It's just been really slow to get up and get going. But, um, you know, what do you see here? Low, high, discount retracement, bullish imbalance. This is the spot. And right now, this is the level to beat. That's a bearish imbalance that we've already rejected and got down and through. So I think if Penn can make some noise over that 22.21, this could seriously make some noise. It's another really good one. I know Ryan brought this one up today. Couple levels untouched above, but they're pretty far. So yeah, that's Penn. in addition to the DraftKings idea. So yeah, the closures. Wicks give you the heart attack, bodies tell you the story, right? That'll get ingrained in your brain. All right, MU, sure. Hold on one sec. All right, back to Micron. All right, let's see. Get low. Gotta fix that to your high. Beautiful. Okay. Oh, whoops. Remember, this is a monthly time frame, and I know I say this every single time, but I want this to get ingrained in everybody's head too. If it doesn't make sense on a monthly time frame, the highest of time frames that I really look towards, of course, I don't look at a yearly chart every day, but there are a few names that I've identified as yearly setups that my overall bias on the highest of time frames that I'm looking at would be bullish, and I'd want it to break down into smaller time frames, and I want them all to line up in the same direction. And when that happens to me, that's me like putting together all the stones on Thanos's glove, or it's like, or the gauntlet, whatever it's called. That's when all the stars align, and you're often going to notice that more often than not, your trade's going to go in the right direction, right? You just have a lot of layers of confluence when you can put together multiple time frames pointing in the same direction. But realistically, on Micron, would want the monthly to close back inside this volume imbalance. It doesn't have to be a wicked bounce or anything like that, but a closure back inside or above that imbalance would be encouraging for ultimately a next month order block to form, right? There's your gap down, right? Gap down into discount. We weren't quite discounted yet. Gap down, here it is. So this is a pretty important spot. This also lines up with a low, high, lower low, break up and through. Bullish breaker here on the monthly time frame. It's a big one though. That's the only problem. But yeah, not bad. So again, it just all depends on how you're going to attack this. Are you attacking it from a wide, far out lens? Are you attacking it from a short-term lens? That's the important question to ask yourself. Because if you're looking at this from a far out lens, which I tend to do on names that I'm like buying shares in, or whatever it might be, not Micron specifically, but I just view these zones more as like areas to accumulate versus it needs to bounce here or I'm out. You know what I mean? If I'm trading options, I obviously want that to happen rather quickly, and that's really when I start to transition down in time frame to try and be as precise as possible. All right, we got like two more. Starbucks. I don't know about this being bearish just yet. Somebody had asked if this was bearish. From your low to your high, you got your discount retracement. This is an order block. It's not really what I like. So this really isn't a setup for me per se. You got relative equal lows down here too. I really don't love the Starbucks setup, to be honest. You got a bearish imbalance here. If this monthly were to form a bullish imbalance here, that's pretty encouraging, but otherwise not really so hot. I can argue this bearish as well, but I don't really have all that much interest in this name. If you were just to go back in time, other than the first Mando model completing, this is back in 2006. If you were to just slide this thing over from low to your and go to each one of these highs, I am cheating a little bit because I already know the answer. We have not gotten into discount. Oh, we did. Wow, we got into discount. Whoops, I was wrong. There's your discount retracement. There's your run for highs. That would be the completion of the Mando model, and this is what we're working with right now. So yes, you have relative equal lows here. You're structurally still bullish despite being well off the highs, right? If you were to look at this on a smaller time frame, yes, you would be correct, right? These runs are definitely bearish, but I don't love the equal lows here, but forming this bullish imbalance would be encouraging, and realistically, that would be the low of my idea anyways. So I just need the structure, right? Right now, I don't have an imbalance to trade off of really because this isn't completed. There's still 3.5 weeks left on that. So that is Starbucks, AVPT. Whoa, nice. Whoa, nice. This is a nice one. Next bearish imbalance isn't for a while here. 1370. That's pretty good. Pretty good on Av point. I think somebody actually brought this up in the group today. But yeah, here's your little breaker. Low, high, lower, low, break up and through. Here's your retracement into the breaker. Gonzo. Next draw on liquidity is here. Okay, right now you're in the process of creating a bullish monthly fair value gap. Okay, not quite. And then buy side, So this actually don't look too bad. This is the showtime imbalance at this point. Haven't been touched yet. I wouldn't be shocked with a retracement at that point, but we're not quite there yet. So yeah, pretty good on AVPT. Let's zoom in just a little bit more. I think this one, yeah, it ran a little bit more to start today. But if you want, we can do this. Okay, first shift in structure would be by taking out this high. Okay, take that out with, whoops, low to your high, discount retracement. This is a bullish order block. Again, not really for me, but nonetheless, the idea plays. Run for highs. Mando model is complete. Here's your next. From your low, whoops, no discount retracement. No discount retracement. Oh boy. Yep. So I'm thinking that when this eventually does ultimately get up into that bearish imbalance up here, I wouldn't be shocked with a pretty deep retracement on this name, but not quite there yet. So that's AVPT. Wow. All right. We got 48 people plus whoever's on Twitter watching this. Let's see, who do we got on Twitter watching this right now? Good. 317. So yeah, about 400 people would rather get better than watch the NFL. Good for you. Good job. All right, let's BLDR for Declan. I just saw his message. Yeah, Declan, if you can just drop him in the chat. Luckily I caught it this time. I saw this one. So let's look at this one. BLDR. Builders. Okay. Pretty good so far, huh? Look at that. We drew this out. We must have looked at this another time. So, yeah. Okay. There she goes. So far, so good. This is actually an important spot. That's very important. Would want this weekly to close above 167.12. Okay. This is a mitigation block, so you could see a little bit lower of a dunk. And there's a bullish volume imbalance here. I'd prefer it to just close above here, but ultimately, I think it's going to go back up towards those highs. If I had to take a guess. Now, here's the one thing. At some point or another, everyone would anticipate some sort of retracement, right? Just looking at it from a wider lens. And when we're at those all-time highs, it becomes much more difficult to make that, sure thing type of assessment. This is your real monthly range. We are way, way, way up there. Okay. So, again, if all we're looking for is some sort of structure, if you can take a loss and, not be destroyed by it, right? But, decent setup. It's just when you look at it from the bigger picture, it gets a little bit more fuzzy. That's for sure. But that's a BLDR. NF what? I don't know what that means. Okay. Cost and Netflix. Sure. All right, let's do Costco first. So Costco did something news-wise, and as you know, I don't. I should just do cost. I don't really care too much. Here's the thing with Costco. Yeah, that's tough for me to be a buyer. That's all. What do you think? Could it keep going? Sure. It's just really difficult for me to pull trigger on something like this as far up as we are. Nowhere near discount of this overarching range. Your range right now on Costco really does bring you all the way back to 2008, 2009, sorry. Sheesh. Yeah, that's a tough one. That's tough for me to get behind, to be honest. But discount way, way far away. But when you're at all-time highs, I don't think that we really have the tools or anything like that to really deem when is time up, if that makes sense. When is the plug going to get pulled? When are things going to start to revert? Yeah, Costco is a beast. Oh, I like that. Yeah, yeah. JS41 CPT. Nice. um, but yeah, there's a lot of names like this, and it's just hard to like, get behind them, whether it's looking at it from a far out perspective or even tight, like a smaller window. It's really hard to get behind some of these just based on the fact that they're so far. And that would be the time where I would use the term extended. Like that's pretty extended, right? And that's not even to say that this can't go down. It's just like I just never really in my lifetime had an opportunity to get this at any sort of discount. So it is what it is. But and that was the one thing that I wanted to bring up because I've been talking about it a while. Like Nvidia hasn't given us a monthly discount, yada yada yada. And while that's all correct, look at what you're seeing here on cost. Meta had one for 11 years. What is this? This is a 15-year uh, move higher without any sort of discount retracement. So it can happen. If we were to break this down into smaller time frames, again, this is just a little bit less of a I guess I don't want to say a low probability. It's just a lower probability due to the fact that your monthly is just really hard to jump in front of that. Even where you sit right now on the weekly, you're well in premium. Hasn't been a discount retracement in a long time since 2022. Low, high, discount retracement, bullish imbalance, and discount of the bullish range. Whoops. Oh, we didn't even get into this one. Okay, don't worry. There's another. See, wicks give you the heart attack, bodies tell you the story. And there she goes. So yeah, this is Costco overall. Just really, really tough one to get behind. All right, I think Netflix is the last one we're gonna do. Also, another one that's a little bit more difficult. I know. I'm sorry. I'm sorry. Here, ready? So just from your original low to your high, discount retracement, bullish imbalance, run for highs. Here's your little turtle soup move. Okay. Turtle soup taking liquidity in the inverse direction of the overarching trend. There is your low. Swept the low. Immediately yanks, runs back for highs. Okay. And by taking out that high right there, okay, we swept liquidity. Now, at this point, do we continue to see expansion or do we get some sort of discount retracement? Obviously, I'm in the camp where I'm not saying this is going to happen, but I personally would like to buy things in discount. So, but the problem here is we've never been up here before, right? This is all time highs we just took. There's nothing indicating to our left any information whatsoever beyond this point. And when we get to situations like this on these names, it's really when I'm just hands off, you know, and I tend to look elsewhere as a result of that, if that makes sense. I don't know when the plug is going to get pulled. That's my biggest thing. So that's I think that's all we got for tonight. Let's see. Let's go back over to the chat right now and see. Oh, Carl, nice, man. Yep, Adnam, you got it. Yep. First imbalance that formed, and it was gone right here. Nice, good eye there. Yeah, Yeah, so tonight in itself, I mean, we went over just the Mando model in itself. We went over briefly odd nam. We went over the idea behind a protected low. We went over the idea of turtle soup. We went over our imbalances. We went over buy side and sell side liquidity. We went over relative equal highs, relative equal lows. We went over the London kill zone. So we rattled a lot off tonight. And I know that's more of a wide lens, but of course, if you really were to hammer down and zone in on each, you could really spend an hour on each concept to really drill it into your head. And of course, that is the idea. So, no problem. Yep. So everybody who took some time out to skip out on the NFL, competing with the NFL here, but let me tell you about 1775 coffee first. Uh, have you heard of the recent advertising scandal? Let me break it down for you. The CEO of Rumble, Chris Pavlovsky, recently released an email from Inspire Brands and Dunkin' Donuts. The email explicitly states the right-wing culture of Rumble is too polarizing. In other words, Dunkin' Donuts has a problem with right-wing culture and wants nothing to do with it or Rumble. So here's the solution. Stop buying products that don't support you and start supporting brands that do support you. The competing coffee brand that we all need to get behind is Rumble's 1775 coffee. For a limited time, Rumble is offering buy 2 bags of coffee and get one free. Go to 1775coffee.com and enter promo code Duncan to get this limited time deal. 1775coffee.com, promo code Duncan. Wow, I love that troll. It's one of my favorites right there. So anyways, I will catch everybody. There's no Mando's Morning Brew tomorrow because we did this tonight. We'll be back Sunday night for weekly prep. Good luck. Be safe out there tomorrow. Expecting a lot of volatility with a pretty important data drop, red folder, right? Something that carries some weight. And we'll be back soon. So anybody in the group, if you have any questions, have any comments or anything like that, I want to get back to doing some of these night calls. It's just a lot of people doing other stuff. Summer's winding down. Well, actually, summer's over, so time to buckle down and get after it. So, with all that being said, I will catch everybody next time. Good luck tomorrow.